Good morning, ladies and gentlemen, and welcome everybody to our webinar on the impact of COVID-19 on the JSE listings requirements. This is a Merchant Tech Capital sponsor initiative, and it's what we anticipate will be first of a number of webinars to be hosted in the future by our team. My name is Rick Irving, and for today's session, myself and Monique Martinez, who jointly head up the sponsor team, along with our colleague Jordan Toy, will be hosting this session. You'll only be able to see my face in the block on the right-hand side, but if it's impeding your view of the slides, feel free to move me away. Okay, guys, let's get going.
Good morning, everybody. This is Monique Martinez from the Merchant Tech Capital sponsor team. And I'd just like to reiterate at the get-go, for those of you who may have joined after Rick had begun the presentation, that there's no need to check your connection. Just as I can't see any of you this morning, you will not be able to see me during our webinar. However, I am looking forward to spending the next short while with you as Rick, Jordan, and myself unpack the various letters regarding the impact of COVID-19 on the JSE listings requirements that have come out of the JSE in the recent weeks and months since the outbreak of the coronavirus. While for some of you, these letters and communications may have felt overwhelming, and perhaps may even have given the impression that your inboxes were being spammed because of the steady stream of communications, our objective this morning is to help you to unpack it all so that you can take from this webinar the critical regulatory considerations. Between the 10th of March and up until yesterday, there have been 12 letters dealing with various listings requirements related topics that have been issued by the JSE and which are relevant to equity listed entities. That's without counting the additional letters that have been issued which are relevant to issuers of debt securities or specialist securities or to the sponsors themselves. However, as you will see on the slide on the screen, there are only 7 topics that we have highlighted for inclusion in today's webinar. This is because, as you will see in item 3, financial reporting, the JSE issued 2 letters dealing with this matter. The first one on the 25th of March, entitled Impact of Financial Reporting, and the second letter on the 3rd of April, which was entitled Extension of Financial Reporting. So we will be dealing with the content of these 2 letters under the one topic or heading of financial reporting. Similarly, in respect of item 5 on the screen, which deals with dividends, this comprises 3 separate letters that the JSE has issued in March and April dealing with this matter, and which Rick will step you through to get a firm understanding of the content. In the interest of time this morning, there are 2 letters that were issued that we will not go through in detail during the webinar, but which we want to bring to your attention as we've noted at the bottom of the slide. The first letter, which was issued on the 10th of March and entitled Impact on JSE Listing Requirement, was aimed at reminding issuers to assess the impact that the COVID-19 outbreak may have on their business operations, and then of their disclosure obligations relating in particular to 3 items. One being the disclosure of price-sensitive information, a concept which you are all no doubtedly familiar with. The second being the disclosure of material risks in the annual report, which has been in effect since early December 2019. And finally, IFRS measurement and disclosure dealing with fair values, impairment assessments, and accounting estimates. Similarly, in respect of the letter issued on the 26th of March and entitled Foreign Stock Exchanges, the JSE requires the monitoring of any market notices or communications by foreign exchanges or regulators, which may impact the listing status or trading of securities of issuers who have a secondary listing on the JSE or who have a primary listing on the JSE and a secondary listing on another foreign exchange. And as I can see from today's attendees, the majority of you are not affected by this particular letter that was issued. So to summarize, Rick, Jordan, and I will be taking you through these letters under 7 items or broad headings so that you can extract the key takeaways from each of the letters. Hopefully this format will make the information a little bit more palatable and easier to digest. So without further delay, I'm going to hand back over to Rick to discuss our first topic, being the impact on shareholder meetings, before I come back to you to take you through the impact on transitional provisions.
Thanks, Monique. And just before I do that, talking about palatable, since all of you can see me and I can't see you, I'm sure some of you are still in your pajamas this morning. Now's your opportunity to grab that Wednesday morning beer. That's if you have any left, since Cyril didn't relax the alcohol restrictions in his speech last night. But settle in, and we're briefly going to unpack critical considerations for issuers stemming from the letters. So the first item on the agenda is the impact on shareholders' meetings resulting from the JSE's letter dated the 19th of March. Now, Section 63(2) of the Companies Act allows for meetings to be held by way of electronic communication. That is provided that this is not prohibited in terms of the issuer's MOI. Further, the electronic communication must enable all persons participating to communicate concurrently with each other without an intermediary and to participate in an effective manner. Now remember, guys, post-lockdown, social distancing will continue, and we're not going to go back to life as normal in terms of meetings and shareholders' meetings, although I'm sure you will, as you would normally have had low attendance at your meetings anyway, this won't be something too different. However, looking at some of the other considerations which we've noticed that have come up during this lockdown period. The first is the lodging of proxies. Now, as I'm sure many of you are aware in terms of the Barry versus Clearwater Estates, NPC and others case, the Supreme Court of Appeal confirmed in terms of Section 58 of the Companies Act that a time bar cannot be placed on the delivery of the instrument appointing a proxy. So this follows that should the meeting be conducted by electronic means, a proxy can be appointed and a form lodged by any time prior to the proxy exercising the rights of the shareholder at the meeting. So critical for you guys, what this means is that you'll need to make sure that your transfer secretaries will have the ability to receive and verify proxies right up until immediately before the shareholders meeting or immediately before voting occurs at that meeting. Similarly, should issuers be able to submit proxies up until immediately before they vote, they will need to be able to vote electronically at the meeting. There's currently a number of different platforms and service providers which are offering this service. And then lastly, as it relates to notice periods, remember that where shareholders exist for which electronic details are not available in order for electronic distribution to occur, a physical copy of the notice must be posted to the shareholder. Now, the notice period will only commence once the post office opens and postage occurs. So an example that we're dealing with right now is one of our clients has about 50 shareholders out of the thousands that they do have, which they do not have electronic details for, and they're not able to obtain those details. So they're in a position where, despite their circular being approved and ready to go, they're unable to call a shareholders meeting until such time as the post office reopens, as they're unsure of when that will be and when that notice period will need to continue until in order for the general meeting to take place.
Hi everyone, Monique again. I know that at first glance, this slide dealing with the impact on transitional provisions may seem like it contains a lot of new information. But if we break it down into bite-sized chunks, the one thing that you need to remember is pretty straightforward. So I'm going to step you through the slide bit by bit. Essentially, what the JSE's letter regarding the impact on transitional provisions is conveying is the following. In respect of certain amendments that the JSE made to the JSE listings requirements, which, as you may recall, these amendments came into effect last year, and more specifically on the 2nd of December. So these certain amendments are required to be disclosed in your annual report or annual financial statements, as the case may be. These amendments pertain to the 6 items that are set out in the rows of the table on the screen in front of you. And they are the disclosure requirements regarding the amended public shareholder provisions, compliance with applicable laws, which includes the Companies Act, your Memorandum of Incorporation, and material risks. Disclosure of dealings in securities, which now includes the new provisions dealing with the disclosure of the holdings by directors of securities which are subject to security, guarantee, collateral, or otherwise. being the so-called pledge transactions. The provisions dealing with the wider board diversity policy, the audit committee responsibilities, and the CEO and FD sign-off of the AFS provisions. So all these items are required to be disclosed in your annual report or annual financial statements, as the case may be. The question is, by when? As you will see in the next column that has been added to the table, when the amendments to the listings requirements became effective, the JSE required issuers with year ends of 28 February and later to incorporate these new disclosure requirements in their financials in respect of the first 5 items in the table. And for the last item, being the CEO and FD sign-off, this would be applicable for issuers with year ends of 30 June and later. So far, what have we got? Well, 1, that the listings requirements were amended last year. 2, that certain of these amendments require issuers to disclose their compliance with such amended requirements in their financials. And 3, that the timing of such disclosure applies to year ends of 28 February and 30 June. However, and this is the one thing that you need to remember about the impact on transitional provisions. And we've set it out in the last column that has just been added to the table, that the JSE has, for the most part, extended the date for the new disclosure requirements. So that's it, everybody. Quite simply, date changes that relate to the transitional disclosure provisions. If, however, you feel that you or your boards need assistance in unpacking the actual amendments to the listings requirements, the good news is that we'll be presenting them during our next webinar, which will be our Regulatory Insights Briefing webinar to take place on the 13th of May. So be sure to register for that event when the invite hits your inbox, or feel free to contact us for a one-on-one. Over the next few slides, I will deal with the third item on our agenda, being financial reporting, which, as I mentioned earlier, deals with the 2 JSE letters dated 25 March and 3 April respectively, regarding the impact of COVID-19 on financial reporting and the extension of financial reporting. Just as a bit of an introductory explanation on the slide's format before I get into the actual content of the letters, you will see that we have included, in the gold text running down the right-hand side of the slide, annotations to the JSE listings requirements, which set out the references to the relevant sections of the listing requirements where certain matters are dealt with. And then jumping straight into the content of the impact of financial reporting letter dated 25 March. In this letter, the JSE advised issuers that, obviously recognizing that COVID-19 may have an impact on the ability of issuers to meet their reporting obligations under the listing requirements, issuers would need to assess the impact of the pandemic on their financial reporting and audit processes, and then to engage with the JSE where they believe that they may not be able to meet their financial reporting obligations as a result of the consequences of the pandemic. These financial reporting obligations include the timing of the publication of the interims, year-end results, as well as the annual financial statements and AGM notices, the completeness of the financial information in respect of the interims and year-end results, the completeness of the annual financial statements, and then the timing and nature of the auditor's reports on this information. Furthermore, in the case of issuers who have been reporting to shareholders on a quarterly basis but are no longer able to do so, these issuers should give consideration to publishing trading statements, which obviously they previously did not have to do given the fact that they were reporting on a quarterly basis. The JSE further stated in this letter that as the impact of the pandemic on the reporting obligations of issuers will vary from issue to issue based on their specific circumstances, the JSE will, on a case-by-case basis, and in respect of the reporting obligations set out in points 1 to 4 of the slide, consider allowing issuers certain variations to these obligations. These variations are referred to by the JSE in their letter as reporting variations. And these reporting variations include an extension to the periods referred to under Matter 1. a variation of the content of the financial information as it relates to minimum content and disclosure as identified under matters 2 and 3, and or a variation on the timing and nature of the assurance report as identified under matter 4 of the slide. Additionally, in the same impact on financial reporting letter, the JSE reminded issuers to ensure compliance with the general obligations of disclosure pursuant to price-sensitive information and trading statements. These paragraphs are included in the listing requirements under paragraphs 3.4a and b respectively, which are reflected in gold down the right-hand side of the slide. The JSE's reason for this is that in circumstances where reporting variation is required, trading statements serve as an important tool to provide investors with insight into the financial performance and financial position of an issuer. So it is the JSE's recommendations that issuers who are utilizing reporting variations, A, provide more detail in their trading statements as what is the market norm, and B, to consider publishing a trading statement even when the differences are less than the requisite 20%, but are viewed by the issuer to be sufficiently important to warrant a trading statement. Where the issuer has agreed to, where the JSE has agreed to an issuer's request for a reporting variation, a SENS announcement containing certain minimum information is required to be published by the issuer. And this information includes the nature of the reporting variation that has been agreed with the JSE, identifying the matter and variation granted, a summary of the reasons provided to the JSE underpinning the request for the reporting variation, and the expected timing of the normalization for the issuer's reporting obligations as agreed with the JSE. Still staying with our agenda item 3, financial reporting, this slide deals with the JSE's letter dated 3 April regarding the extension of financial reporting. So following from the JSE's letter regarding the impact of financial reporting, in which issuers were advised that the JSE would consider granting reporting variation on a case-by-case basis, the JSE then issued a letter on 3 April in which they advised issuers that following their request to the FSCA, the FSCA had issued a market notice in which it was confirmed that a blanket extension of 2 months had been granted to all issuers with year ends of December 2019 and January, February, and March 2020 for the publication of provisional annual financial statements, the distribution of AGM notices and annual financial statements, and the publication thereof on the issuer's website. Now, it is important for everybody to note that the 2-month extension does not apply to interims. This extension, this blanket extension, pertains to year-end results only. And if issuers are to make use of the extension of financial reporting provisions, they should ensure that the market is updated through SENS and the JSE is notified in writing. So in conclusion, and notwithstanding the issue of the market notice, the JSE framework described in the letter dated 25 March dealing with the impact of the COVID-19 pandemic on financial reporting and audited processes pursuant to the provisions of the requirements remains in force.
Thanks, Monique. Now, the fourth item on the agenda being the impact on Reits. This was dealt with in terms of the JSE's letter of the 25th of March. Now, I can see from the attendance that there are quite a few directors of Reits in the audience. However, the majority of you are not directors of REIT issuers, so I'm going to run through this pretty quickly. We're also going to be having a REIT-specific webinar in the near future, so those of you who would like to be included in the invite for that, please just drop us a comment in the chat below, and we'll make sure that you're included in that invite. So it's no secret that the property sector has been significantly impacted by COVID-19. There have been defaults on rentals, pressures in terms of cash flows, potential breaches of loan-to-value covenants, as well as solvency and liquidity issues for a lot of our REIT issuers. So as it pertains to the potential loss of REIT status due to the inability of a REIT issuer to comply with the listings requirements, the JSE advised in its letter that it is currently in active discussions with the SA REIT Association. This is in respect of possible solutions or recommendations, as well as to determine that the role that the JSE can play in terms of the listings requirements and potentially in terms of dispensation in respect thereof. So if the impact of COVID-19 affects the REIT issuer's ability to comply with Section 13 of the listings requirements, that's mainly those continuing obligation sections, as well as affects its potential REIT status, REIT issuers are advised to immediately engage with the JSE, as well as to contact their sponsor in order to compile a ruling request and submit same via the JSE's online submission platform website. The fifth agenda item being dividends. The JSE released 3 letters in this regard, which we've summarized over the next couple of slides. The first letter being the letter dated the 30th of March. In terms of that letter, this was following a number of cancellations and postponements of dividends which were announced by issuers. The JSE then advised that dividends can only be cancelled prior to the finalization date. Now, your finalization date is your record date less 8 business days. They then also stated that postponements or changes in value of the dividend declared must be made between the finalization date and the last day to trade, or if it is made rather between those dates, then it will result in a cancellation of the corporate action timetable, and this timetable will need to start afresh. So your last day to trade there is your record date less 3 business days. In this instance, issuers are required to release an announcement stating the reasons for the variation, as well as update the market as to the new timetable in accordance with that schedule. A few days later, on the 2nd of April, the JSE's second letter on dividends was released. And this letter stated that, notwithstanding what they had stated in the first letter, it was essential that issuers, when contemplating variations to dividends, that the minimum statutory provisions of the Companies Act must be complied with at all times. That is specifically in relation to Section 46(2) of the Companies Act, and that stipulates that once the Board of Directors has adopted a resolution authorizing a distribution, the distribution must be carried out. That's subject only to Section 46(3). Now, 46(3) deals with the reassessment of the solvency and liquidity test should the distribution not have been completed within a 120 business day period. So many issuers have been relying on this escape hatch, and the JSE has received a number of legal opinions in this regard, as per our discussions with them. So the third letter, which came just yesterday on the 21st of April, in terms of this letter, the JSE advised issuers that should they cancel, postpone, or amend the payment of an existing dividend which they've declared, they must publish an announcement recording the basis for this decision, and this announcement must include the supervening circumstances and or reasons supporting the issuer's view that it is released from its legal obligation to pay the dividend on the date in which it was due and payable. Now, to that end, issuers that have already published a cancellation, postponement, or amendment of a dividend which they've declared must consider whether a further announcement is required or justified to explain the basis for the decision. So basically, if you've already published an announcement and it doesn't contain those items listed above, then you would be required to release a further announcement which does contain those items. So basically, what the takeaways that you need to note from this slide are that cancellations must be made before the finalization date, and they can only be made if the cancellation is in accordance with the Companies Act. Further, postponements and amendments to dividends must be made before your last day to trade, and any cancellation, postponement, or amendment automatically triggers a detailed announcement which must include the items in the slide.
Our sixth and penultimate item of the agenda for our webinar relates to the letter from the JSE dated 14 April regarding share repurchases. So what you need to know about this regulatory consideration is that the existing disclosure requirements relating to repurchases of shares remains applicable. and these include the requirement to publish the repurchases of shares on SENS once a certain threshold has been reached. However, because this specific obligation must be seen against the overarching obligation imposed on issuers to publish price-sensitive information without delay, the JSE has drawn the attention of issuers to the fact that if the use of cash for share repurchases during this unprecedented period could have a material effect on the price of its securities, issuers must publish details of this repurchase through SENS without delay, as provided for in paragraph 3.4a of the listings requirements, which deals with price-sensitive information, and not only once the 3% thresholds have been reached.
Good morning, everyone. My name is Jordan Toy, and I will be briefly discussing the JSE's letter on capital raising. The JSE is mindful that in the current economic environment, businesses need to conserve cash and may potentially need to raise capital, often at short notice. In light of this, in its letter of 17 April of this year, the JSE reminded issuers of the various capital raising methods available to them, and particularly that an issuer in severe financial difficulty may find itself with no alternative but to dispose of a substantial part of its business or issue shares for cash within a short time frame to meet its working capital requirements or to reduce its liabilities. Due to time constraints, it may not be possible for the issuer to prepare a circular and convene a general meeting to obtain shareholder approval. The JSE may modify the requirements in respect of disposals and issues of shares for cash concerning the preparation of a circular and the obtaining of shareholder approval, if an issuer can A, demonstrate that it is in severe financial difficulty, and B, satisfies the conditions in Schedule 11 of the requirements. Now, on the basis that rights offer circulars are disclosure-based and do not require shareholder approval, the JSE is prepared to allow for an expedited review and approval process. Notwithstanding the procedures for approval and the applicable submission timetables, the JSE will afford 48 hours for first submission informal comments and another 48 hours for second submission comments, leading to informal approval. The JSE will also reduce the period for formal approval to 24 hours. These measures will lead to a significant reduction in the time taken for the review and approval process of circulars. It should be noted that this expedited review and approval process applies to rights offer circulars only, being non-renounceable rights offers, renounceable rights offers, and clawback offers. It is an interim measure to facilitate capital raisings through the COVID-19 pandemic period, provided volumes are at a manageable level for the JSE, and is subject to the rights offer circular complying with the relevant provisions of the requirements upon first submission. It is worth noting that for the period that the national lockdown remains in effect, and assuming formal approval is granted for a circular in this period, the JSE will not require the documents to be made available for inspection at the registered office of the issuer, provided that the documents are available on the issuer's website, and it is clearly explained where on the website they are located.
So thank you, ladies and gentlemen. That concludes the presentation for today. Now there are a lot of you in attendance, and we have received quite a few questions. We're going to go through a few of them now, just those that we have time for before we run out of our allocated time. But remember, should you wish to have a one-on-one with the team, just pop us a comment in the chat below, and we'll gladly set up a Zoom call and take things further in that regard. So the first question coming through says that we would like to postpone our dividends for cash flow purposes. We have already declared our interim dividend, but given the impact of COVID-19 and significant uncertainty for our revenue for the rest of 2020, we want to preserve cash flow and are considering a cancellation or withholding dividends. Please advise what the JSE would require. So first of all, in that regard, the company would need to postpone the dividend prior to that last day to trade. And in the announcement advising the market of the postponement, details would need to be included as to the basis for the decision, including those supervening circumstances that I spoke about, and or reasons supporting the company's view that it is released from its obligation to pay the dividend on the stipulated date. You also mentioned there the possibility of cancelling the dividend, and so if this option is taken, it would need to be in accordance with Section 46(3) of the Companies Act. And so in that regard, your solvency and liquidity requirements would have had to have changed. And then further, we'd recommend getting a legal opinion in this regard. As I mentioned previously, the JSE have engaged quite extensively with issuers who have cancelled or postponed their dividends. So they will be following up and engaging with you further. So it'll be worthwhile having that opinion in your back pocket. The next question, I think this one's for you, Monique. So the question is, if an issuer's interim reporting period ends on the 29th of February and the issuer is getting their interim financial statements reviewed, so the issuer is going to have trouble with the time-less release due to the national lockdown, will the JSE provide leeway despite it not being the issuer's financial year end? Monique, I think you're on mute.
Apologies. Thanks for the heads up. Okay, thanks for that question. It's a great one. So just very briefly to recap, I mentioned earlier with regards to the JSE's initial letter on financial reporting on 25 March, they had indicated to issuers that they would consider these sorts of requests regarding reporting variation on a case-by-case basis. So given that this question relates to an interim period, it's not covered by the blanket extension that was given under the FSCA market notice. And so the JSE would need to be approached with a motivation by the issuer regarding the request for an extension, which, as I said earlier, is dealt with on a case-by-case basis.
Thanks, Mon. And then we've received another question from Andries. His question is there any reporting responsibility as a result of COVID-19's impact on an entity's integrated annual report disclosures? So Andries, this is obviously quite a unique scenario, given the lockdown. And, should the integrated annual report already be approved and the JSE having not sent out any further correspondence requiring further disclosure to be included in your annual financial statements or your integrated report, if it has already been approved for print and the like, there's nothing forcing you to go and have to put further information in the integrated report if it's ready to go. However, if it is possible and these are potential important subsequent events, and you are able to put this information into the annual report, we suggest that you do so. Otherwise, it's recommended to keep the market appraised of these events and circumstances via SENS.
Rick, if I can just jump in and add onto the response of Andres' question.
Sure.
Andres, if you remember, I highlighted earlier in the slides the issue of material risks. So the inclusion of the material risks in the annual financial statements and annual report is a new amendment to the listings requirements that came into effect in December already. So as Rick had mentioned, if the annual report is still being finalized and you believe COVID-19 to be a material risk, then you would certainly need to include that in your disclosure in your financials. Thanks,
Monique. Ladies and gentlemen, it looks like we've run out of time for our question and answer session. However, thank you everybody for your attendance, and I hope you've enjoyed the webinar and found the content valuable. From our side, it's been great using this platform to engage with a couple hundred of you guys simultaneously. So please look out for the post-webinar email, which you'll be receiving during the course of the day, and which includes an invitation to our regulatory insights briefing featuring Keith Rayner on the 13th of May, as well as links to the recording of the webinar, as well as the presentation. So have a great day further, everybody, and we look forward to engaging with you guys in the future. Bye for now.